Hello and welcome to this week's Australian Stock Market Report. Now this week we're going to look at why Australians need to look at their superannuation so they can retire comfortably. Then we'll get into the Australian stock market so I can share with you my thoughts on where it's heading, along with answering your questions and looking at stocks for you. I'm Gillham, the Chief Analyst here at Wealth Within, and we're Australia's most trusted stock market educators. Now before we move on, thank you for showing your support for our channel and hitting that subscribe button. And remember, as you subscribe, click the bell on the right of it so you keep up to date with our latest videos. Also remember to tune into our live Australian stock market show every Tuesday, 7 to 8 p.m. Australian Eastern Time. Now this is the show where you get to ask us, the stock market education and trading experts, look at your favourite stocks and answer all of your most burning questions. Now let's face it, we will all retire someday, and like death and taxes, it's something you really can't ignore. Now that said, if you prepare for retirement, you can control when you retire and how much you retire with. What is concerning is that according to the Association of Superannuation Funds Australia, women retire on average with a balance of just $122,848 in super, whilst men retire with $154,453. In the Consumer Sentiment Tracker report to March 2021, Finder.com.au shows that there are 24.4 million superannuation accounts in Australia, although only 3 in 4 Australians have superannuation, which is less than the number of mobile phone plans Australians actually hold. Now, as Finder rightly states, superannuation is crucial to financing retirement to ensure you can live comfortably. But as they indicate, 38% of Australians don't understand how superannuation works, which is alarming given how important it is for our future lifestyle. Now, when you look at the figures on how much Australians are retiring on, it shines a light on 2 important areas. Firstly, it's easy to see that unless Australians have investments outside of superannuation, there will continue to be a large gap between the lifestyle desired by Australians in retirement and the reality that they will experience. Secondly, it shows a major failure in our systems around educating Australians in financial literacy. Times have changed and all Australians need to change with it, which means taking responsibility for their retirement rather than relying on the government to pay a pension. For those who are prepared to be a little bit more active, understanding how superannuation investing works and the benefits that can be gained from putting in some effort is more than likely to pay off in retirement. Now the upside is that you'll get to enjoy a better lifestyle than you otherwise would be possible based on the information reported by the Superannuation Funds Association. Now it's time to look at the Australian stock market, so let's start to look at what the best and worst performing sectors were last week. Now healthcare was the best performer, up 1.57%, followed by materials and industrials, which were both up 0.95% last week. The worst performing sectors, they included energy, and that was down 4.33%, followed by information technology, that was down 2.63%, and consumer discretionary, that was down 0.6%. Now the best performers in the ASX S&P Top 100 stocks, they included Reliance Worldwide, which was up 8.11%, followed by Mineral Resources up 7.2%, and Fisher & Paykel, that was up 5.55%. Now the worst performing stocks included Challenger, down 23.8%, following a warning to investors that financial year 2021 profits will be lower. Next, the A2 Milk Company was down 9.45%, and Appen was down 8.41%. I'm going to look at both of the charts on those stocks in a few minutes just so you can get an idea of what they're doing right now and whether they might be coming up as a buy in the near future. So what do I expect in the market moving forward? Well, let's get into the charts for our S&P 500 All Ordinaries Index update for this week. We'll also answer your questions and look at the stocks that you've chosen for me.
A quick reminder before the video starts. This report is an educational tool, and as such, your personal circumstances have not been considered. We hope you enjoy this week's report.
Well, wasn't the market interesting last week? We had some down days, some up days, and it pretty much ended up roughly where it started. So it was an interesting week last week. Now, in my last week's report, I was expecting the market to fall away for 1 to 2 weeks, and for that to happen possibly last week or even in this coming week here. But let's go and have a look at the charts and see exactly what happened. Now, on the screen, it's got a monthly and weekly chart, monthly on the left as normal and weekly on the right. And I won't bring up the monthly today like I did last week, but it's always good to look at that bigger picture. And right now you can see the market just looks really bullish. Obviously, currently in April, the market is quite strong. You can see it's moved up to a new all-time high of 7,358, which it achieved early last week. It actually pushed up on Monday, and I'm going to show you the daily chart in a minute, but closing at the moment at 7,320. Now, going into the weekly chart, you can see here that it's just going above this dashed line here, which is a bit of a momentum line that I've drawn a little bit there, but this is an outside bar, which means the market actually went lower than the preceding week. So 7,209 was the low of that bar. Here we look at that bar at 7,166. So it went lower. So this could be the week I was expecting. The market's pushed down, and this would suggest the market is bullish and would actually move up. Now, I'm not discounting that we'll see another downward week this week, so it is possible the market could go down this week and go below that low of 7,166.2 points, but it may not. We may just see a move right up, and that would be the small, short, fast down week that I was expecting. Remember, I was saying I didn't think the market would be going to be bearish for too long. It was going to be short and sharp. So if we look over here, we see here that Monday's bar, it opened, pushed right up to make that new all-time high at 7,358, closed just above where it opened. Tuesday, Wednesday down, but Wednesday was interesting. It opened, traded all the way down and came right back up through to close higher. And obviously Thursday was quite a strong bar. Friday closing a little bit higher again. So it'll be interesting to see whether this is just a 2-day move prior to the market moving down before. And if I get my can I get my trend line tool? I'll actually go and, where is it? Tools. Where is it? Trend arrow tool. We might be seeing this. That's possible. And that's why I mentioned that we could see just a little bit of a retracement of that all-time high before it falls away again this week. Or if it starts out this week and starts to move up quite nicely, then we probably see, as I said a little bit earlier, I'll just get rid of that. It is possible we'll get a nice green bar, an up week there, and it can trundles along up to that 7,000 or between 7,500 to 7,600 points before the next peak. Either way is acceptable to me. If it does move down, it'll be a short move down maybe this week before it moves up to those areas of 75 to 7,600 points, but it would not surprise me in the market conditions right now that the market does start to move on quite nicely from this point of time over the next few weeks, maybe 4 or 5 weeks through to sort of mid to late May before it starts to come down again. It could be a little bit earlier than that, but right now the time is to make money. There's some good looking stocks, and we're going to talk about A2 Milk and Appen, which I did mention a little bit earlier in my report. So I'm going to bring those up, and then we're going to go into the questions for the day. So let's go and bring up A2 Milk right now. All right, so on your screen, I've got a weekly and monthly chart of A2 Milk, so we can go and have a look at that and see how it's just continuing to fall away. So we've had that all-time high back here in June last year, and it's just fallen away and continued to fall away. Just red after red after red after red. Now, a lot of people are starting to talk about A2 Milk at the moment. They're talking about all sorts of manner of things. There's lots of YouTube videos about it. Janine and I talked about this last Tuesday night on our live show, and it's before this red bar started to unfold. So was Tuesday night. If we go back here, look at the daily chart, you can see here, there was Monday last week. So we were talking about it roughly around here, what we're talking, where my pointer is, and we're saying a lot of people are still trying to get in and buy this, thinking it's starting to move up. It's nice and cheap. Let's get into it, which is something that Janine and I were against. We do like this stock. It is still falling away. I still think it'll probably go around to about $5, in that $5 mark, where it will most likely find support. So it's probably got another 10 to 20% more of a fall before it finds support and will start to move up. So please don't try and catch a stock like this, because there's a lot of talk about it at the moment, because trying to buy cheap will eventually get you stuck in a stock that's going to keep falling away. Remember, we need to trade on confirmation of the move stop, not speculation or trying to get in because you think it's cheap. Appen is exactly the same. If we look at Appen again, it's had its all-time high back here in August, nearly. I mean, A2 Milk was June, this is August last year. It's fallen away. It's only had one green bar in this this move. It's gone below these prior troughs through here. It is looking bearish, and if we look over at that weekly chart, you can see again another little move up. And stocks do this. They make little moves up, fall away, little moves up, fall away. And this point in time, the low there is $15.08. If we look there, that's $15.15. So it's fallen below that more recent low. Appen, I think, is going to go somewhere around about that $10 mark and start finding some support above that $10 mark. But again, this is just my thinking at this point in time. It may or may not happen, and that's why you really do need to watch out for stocks rather than just buy because you think they've come off a high or they've fallen enough to make them, in your mind, cheap. It's always let the thing hit the ground and start to bounce up before you buy into it and make sure it's going up, not going down when you do buy. But to me, these are two stocks that people are talking about at the moment. I do like both of them, and I will get into both of those, but not right now. I'm staying out on it. Probably be another couple of months before I would get into these stocks at least. So, but just keep them on your watch list. Now, let's get into the first question that we have today. And this is from Transcendence. He says he's interested, or they said they're interested in my thoughts on Downer EDI. Now, the share price has been range bound for the past 6 months with volume decreasing since February 2021. They say they're sitting on a profit of 10 to 15% at the current price. Thinking about it's more likely to head up from here, even if temporarily I see the upside potential, but I'm not super keen waiting 18 months for it. So let's go and have a look at that stock. Now, again, on your screen, I'll just bring up Downer EDI and look at that saying waiting 16 to 18 months. I'm not sure what you mean by that, unless you're doing a lot of time analysis, etc. You may not understand how long it is to get up to these the percentages that you're looking at, but it looks all right. It's just had a bit of a fall over here. It still looks quite strong to me, even though it's come down into March, that low of $4.93. Monthly, it looks pretty good, so I'm not sure what you're worried about. You're in 10 to 15% profit, because the thing is, a lot of people try and make estimates of what they think will run faster than another stock. Now, this stock looks all right. It's a nice strong week. It traded down earlier in the week last week and to take off again, so I do like it. I think it's just in this consolidation phase and it'll break up and do very, very well. So I don't have an issue with that at this point in time as far as a stock. Now, this is where a lot of people say to me, oh, look, I'll get out of a stock when it runs this much, or do that. Or they might say to me, this stock and this stock, which one's going to make me more money over the next 12 months? And quite often it's pure speculation and you get it wrong, or people get it wrong. Even I do. Sometimes I think a stock will go, okay, I think this one's going to be the best stock. I do all my analysis on it and this stock just takes off like a rocket for whatever reason, because we don't always know what's happening into the future. We don't know the announcement the stocks are going to have, or the deals that they're doing, and a whole range of areas around those stocks and announcements, because volatility is something you can't actually predict, or these sorts of things you can't predict. You can only look at the chart and go, that looks good to me. So really the trick is to stay with the stock while it's rising, and at the moment I don't have any issues with Downer. It does look good to me. It does look like it will continue to rise, and I think you'll do well over the next 6 to 12 months. But how well, that's where you need to put the work into it to see where you got. But thank you for asking the question. Next we have a question from Mickey, who says, Dale, it's not a normal market, and I completely agree with you. How reliable does this make the charts? Thanks for your program and indeed your honesty. Now, he's responding to something I was saying last week, saying how the market is not normal because we've had the biggest fall we've ever seen in such a short period of time. You probably would go back to maybe 87 and maybe seeing a fall over a short period of time during the 87 crash. But the 87 crash was a lot longer in time. It was a short one, and it was the shortest one we'd ever seen. But the COVID one was even shorter, but there was a period of time in the 87 where it fell very quickly over a number of days. So you might be able to compare those two, but it's the shortest fall we've ever had COVID, and it's the biggest rise out of a crash like that we've ever seen. So it's really unusual times. And as you hear me saying at the moment, because of government meddling with the economy and the stimulus and all sorts of other stuff, we didn't have those sorts of things going on in 87. We didn't have government stimulus packages there when the market crashed, and we didn't have those sorts of things in recessions and everything else. Now with this whole new way of managing money with fiat currencies and looking at, I can't remember the name of it, where they just keep pushing out money into the economy, hoping to stimulate it to support the economy. It's giving us an artificial market, so to speak, at the moment. So we've got unemployment there, still much higher than what we had pre-COVID. There's a whole range of economic issues going on, and so we've got an abnormal market. We've got some companies doing well, some companies not doing as well. Companies are being supported with some of the incentives from the government. Some companies aren't getting those incentives anymore. So there's a whole range of stuff going on at the moment. So what we're talking about with the marketplace, it is abnormal, so it's a little bit harder to pick, but it doesn't make the charts ineffective. Now, charting it as like anything, whether it's fundamental analysis or technical analysis, none of it's 100%. And so you can only do your best effort at any one time. With charting and technical analysis and the rules and tools, there's the percentage probability of a rule or a technique or the data on the chart will give you. For example, a trend line on a specific stock may give you a 70% win-loss ratio, but on another stock it may give you a 50% win-loss ratio. And in saying that, you could also find that the 50% win-loss ratio actually makes you far more money because we've got stop losses on where it's entering in a stock itself. So just the win-loss ratio on own doesn't mean it's going to make more money. But charts will still work, and it gives us still an indication. The charts are not going to be right 100% of the time, but right now the charts are giving us an indication. They're telling us the market is not normal. They're telling us the market can do various different things, the way the patterns it can take different directions. That's why we're being quite careful at this point in time, because it's far better to err on the cautious side than the aggressive side. I know people are getting in and they're jumping into stocks as soon as they start to move, and they've been doing that for the last 12 months since the COVID meltdown happened, and they've never really been tested. There's a whole generation of new people into the stock market that really haven't been tested by it, and the market will test them, and when it does, it'll test them when it moves downwards, and you'll see how well these people understand the market. And I'll tell you, it's just going to happen. You'll get a lot more blood on the street. We've seen it over and over and over and over again over decades, but the charts still do work. They're still very, very valuable, but they're not as accurate at the moment as that normally would be, but that'll come back to being normal soon, and everything will go back to how we do it, and we'll get it right most of the time looking at the charts. But right now, just protect your downside. Make sure you got your stop losses, know why you're buying, why you're selling, have rules around that, have good money management like I talk in my books, and you'll be fine. But thank you for asking the question as well, because it really, really is important. I know a lot of people are saying to us, well, why don't you do fundamentals? Why don't you tell us about, qualitative and quantitative analysis and talking about, the growth and valuations of companies? That's not what Janine and I do. We're technical analysts, so we're not fundamental analysts. Whilst we use fundamentals in our trading to look at what to buy, fundamentals only tell us what is looking good and what's looking weak. It won't tell us when to buy and sell. That's where the technical does. And if we use fundamentals or go into fundamental analysis on our recordings, we'll cover about half as many stocks because it's a lot slower to do and talk a bit about. But anyway, let's get on to our next question. This one's from Hoosh Gaming, who says, hello, Dale. Can you please analyse Linus? I do not hold a position in the share, but have been monitoring it with a view to entering it when the time is right. It's been on an uptrend with the recent fall last month, and this month your views on Linus would be appreciated. So let's go in and have a look at Linus. Now, I'll just bring it up on your screen. Again, monthly chart on the left and weekly chart on the right, and the monthly chart's completely disappeared on me. Isn't that nice? But okay, I'll just bring up the weekly chart. Looking decidedly weak at the moment. You can see that sort of zigzaggy pattern. I'm not sure. Right now, I think it's probably going to fall away a little bit further than what it is. That's a very, very weak bar. Now, you remember what I was talking about on the All Ordinaries Index with my trend arrow, and you can see the zigzaggy pattern. There it is, the zigzaggy pattern. I would suggest this stock's probably going to come down. Probably at the moment it's fallen. Let me have a look at this. That's not the one. So it's probably going to fall down to at least around that sort of $3.40 mark, in that sort of area there. I'd probably put a few other different tools on it to work on. It's fallen 23%, so that's a fair fall from where it currently is. So around about 340. It's another 20. So it probably might fall about 50% in price, which is not too shabby. I would suggest that would probably be more reliable. It would fall that. It may even fall even further than that. But right now, people are saying rare earths because of battery technology and everything else. But there's a lot of other technologies coming out, and whilst I agree with the theory there behind it, saying rare earths are finite materials, so if anything in batteries are taking rare earths, and the miners that are mining those should do very, very well. But eventually things get too expensive, and the big end of town buy for future. So at the moment, it's just coming down. So you might be waiting a while before you actually get into the stock. But really do thank you for sending in your questions, and thanks for everybody for sending in the questions. Remember, if you do want to have your questions, please just send them through. But if you want to get a copy of my first book, How to Beat the Managed Funds by 20% for free, then you can secure a copy by just clicking a link in the description below. This is my first book, How to Beat the Managed Funds by 20%. It's free. Just pay the shipping and you'll get it sent to your home, and have a good read, because it'll help you understand stop losses and portfolio management, portfolio construction. It'll help you understanding buying and selling, and why you need to take a real active approach in your investment. But please do that. Just click the link in the description below. Now, if you do have a question you'd like me to answer, also just stick it below. Now, before you ask the question, remember, we are sharing our time freely in these reports to assist you and answer all of your questions. And all you need to do is click the subscribe button and show your appreciation to the team who are supporting you. So please click the subscribe button, send your questions in. We're more than happy to help you. So I think it's a win-win on both sides. Now remember that here on this channel we do these Monday market reports every single week. We also do our live stream every Tuesday night at 7 p.m. So before you hit hit that subscribe button, click the bell on the right of it so you know when we upload new videos. Now I'm Gillham, the Chief Analyst here at Wealth Within. Goodbye, good luck and good trading.